Good morning, Clive Lambert from Futures Techs here, and let's have a look at a few charts today. And let's start off with the S&P 500, looking at the futures here, and I've got a daily chart that I'm looking at, and we have been going up, and that the recent rally has now seen us retesting the green line on our chart there, which is the 200-day moving average, and sits somewhere around 27.50 at the moment. And we got above there, sneaked above there earlier in the week, and have found some sellers. But you know, we've been burnt before thinking that maybe the S&P is topping out, and we've got an uptrend line sitting on the chart at 27.10, so I'm going to wait until we break there, or to see if we can break below there, to say that maybe the sellers are returning in this one, having seen maybe another failure at the 200-day moving average. The other thing on our chart there in the bottom window is the ATR, average true range, and that is quite a low reading at the moment, which is what we generally get when the markets are crabbing higher. This one historically, especially over the recent times, has been going up slowly and then selling off sharply. So you know, we'll wait to see if there's an uptick in the ATR, which is average true range, to see whether again, to give us a sign that maybe the sellers are returning in that one. On this side of the pond, we have the DAX futures, which is the German stock market, and that is in sell mode, and there has been for 6 months now, having given a sell signal at the end of last year, basically, when we broke through 11,500, gave a head and shoulders top sell signal, and we saw a sharp reaction to that, down to 10,200 and 10,300, and then again it recovered, but we are seeing signs of sellers returning when we're trying to come back to and retest that neckline. So that's a bearish looking chart to me, and I'm looking to be short and looking for that to head lower once more and to retest 10,500 and the lows from the last year as well. That's how that one's set up. In the commodity space, Brent crude oil has been trying to go high. You know, it's had a decent recovery so far in 2019, but had hit the buffers, if you like, somewhere around $64 to $64. But we have, in the last few days, seen some big resistance levels taken out. And like we saw the head and shoulders top in the last chart on the DAX, we've got the opposite pattern here. We've got a head and shoulders bottom, and that triggered a buy signal earlier in the week when we got above $63, and that says to me we can now head up to $73, maybe even up to $76. That is we've done a lot of good work to the upside there, and actually on this one it looks to me there's quite a lot of disbelievers in this rally out there, which from a technical analyst's point of view gives me even more confidence. I don't mind being contrarian if the chart is telling me that the market is doing something that maybe everyone else doesn't really believe. We got some really solid bullish divergence on the MACD and that chart as well when we were making those lows towards the end of last year, which adds weight to the idea that we're not going to be revisiting those lows for a good while. And my final chart is gold. It's a weekly chart. We have seen a solid start to this year and the tail end of last year, but it's stalled in recent weeks. And why is gold stalling? Why can't the recent recovery continue? Well, the weekly chart gives us a massive clue as to why that might be a problem, because 1380 is massive. We have seen a number of failures as signaled by the orange lines on our chart there at this area, 1380. Big resistance, so gold's only really going to get going to the upside and start thinking about going to levels like 1480 and 1590 if and when 1380 is cleared. It's clearly giving the market some trouble at the moment.